Hello there, my name is Randall Liss, and I'm here to talk about options with you. Now, the options market is full of information about what the market thinks will happen. Open interest is a great indication of where the market thinks the strike price will be at expiration. Excuse me. You can also use the at-the-money straddle to tell where the market thinks the trading range will be. After all, it's the same law of supply and demand. The buyers of the straddle think the underlying will move more than they paid for it. The sellers of the straddle think it will move less than they sold it for. So, fair value is where buyer and seller agree on price. And this gives you information on where the market thinks the trading range will be for your option strategies. The at-the-money straddle gives you what we call measured move targets, or MMT. The owner of the at-the-money straddle can only lose what they paid for it and has a potentially infinite profit range. However, the clock is the killer of the long straddle. Every day that goes by where nothing happens, the straddle is worth less. The seller, on the other hand, the most they can make is where they sold the straddle for, and they have a theoretically infinite loss. However, the clock is on their side. So the people who buy the straddle think it'll move more than they paid. The people who sold the straddle think it won't. So let's look at a real-life example from today using the exchange-traded fund that mimics the S&P 500, known as SPY. A very good product, by the way. Deeply liquid, very narrow bid-offer spread. I often advise my students and mentees to trade that product. It mirrors the S&P, it's not stock specific, and it is an easy trade, an easy product to get in and out of. And never forget, ease of exit is always more important than ease of entry. So, this morning, SPY was 206. So we use the April 206 straddle. It was trading at 7, 360 in the put, 340 in the call. What does that mean? That means the market, in its wisdom of supply and demand, thinks the trading range until the third Friday in April will be 199 to 213, or 1990 to 2130 in the S&P 500. That is valuable information. How can you actually apply it? Well, this tells you where to set your wings if you're doing an iron butterfly or an iron condor. This tells you where you should be stopped, where you should have protection, and inside that, sell it. It also just tells you what the market thinks the range will be. The MMT, worth looking at. Okay, that's my talk for today. My name is Randall Liss. My website is www.thelissreport.com. I write about options and the market every business day. Thank you for your attention.